We're still full on in earnings season, and today I'm doing something a little different. I'm still going to look at stocks that are releasing their earnings reports in the day ahead. So that is stocks reporting on Thursday, February 5th. But we're going to let momentum guide us to see if we can actually find some setups. So I'm still going to use price action, market timing, and momentum because I'm Hima already and that's what I do. So what's a little different here is that I still went into wealth charts because I like the feature where I can search by earnings date, and these are S&P 500 stock components. I took all these tickers starting with EL, CI, LIN, all these guys who are reporting earnings, and I typed the tickers out into my own separate list. Then I dropped that down into TradeStation. So there you go. Now I dropped that into a radar screen in TradeStation, so that's a list of tickers. And as you can see, I have adapted my radar screens to show the current RSI Power Zones value. So the RSI Power Zones, just like the traditional RSI, live between 0 and 100, so now we can see the values. Now here's the thing. In my time on Wall Street, when I had to scan hundreds of stocks and make recommendations to institutional desk traders, I found it a lot easier to look at stocks based on how they're behaving, not what asset class they're in, or sector, or how big they are or small. So there is one guy in this list, Amazon, that we'll definitely look at because it's a big player. But for the rest of the stocks that are reporting on February 5th, we're going to let the momentum dictate what I comment. So let's dive in. First thing I'm going to do is actually sort from rising momentum to falling momentum. So we are going to start with the lower values. So these might be some stocks that are beaten up, and move them through and see what the stocks that are up and to the right look like as well. All right, so I won't comment on every single one. I'll give you my takeaways as they see fit. Okay, right out the gate, the first on the list, KKR. What I like about it as a prospective stock to possibly buy is that it's headed back towards important support from April of 2025. And the RSI Power Zones is pretty beat up. So every time it came back to bear support, it turned higher over the past year. So I'd keep an eye on it to potentially look to buy maybe in the $93, $94 area if it stabilizes there. What I like about GEN is that similar to KKR, it has been pushed lower. It's a low price stock, but you can see it's trying to get traction back above the low from last April. So this could be a short-term recovery play, okay? It's technically counter trend, but maybe you'll see a return to $26. Okay, Ralph Lauren, ticker RL. This stock has been correcting lower, and the RSI is returning to the bull support power zone. So there may be room here while it's in the 340 area to pause and resume higher, and that could be a longer-term upside play. Now, I'm going to talk about Amazon, even though it doesn't have a great setup because it's a big stock. So Amazon reports earnings February 5th, just like all these others. And right now you can see it's still consolidating between its November 3rd high and its October 17th low. So I think we can put in a trend line support that may be useful here. So we've seen price pull away from it. This is where what you can do is do another trend line from the second point and connect it to the subsequent price action and see if that provides an actual more useful support line. And in this case, it does. So I'm going to take off the original. Okay, so that's a little pro tip for dealing with consolidation and trying to identify the trend lines. If the old one seems to be kind of pulled away from the price action, make a new one more recent. So this trend line is offering some short-term support. I think while above the January 2nd low, I would not want to go short. We will see what results from the earnings, and the way this action is, I think over time we could see a return back to the November 3rd high before a return to the October 17th low. So what I like about VTR, shares have worked off overbought conditions, and the RSI got really oversold relative to the recent action. But this actually sets the stage that if we see continued upside above 80.02, then I would go in and actually calculate the pattern that's evident here. 4 zones RSI students, you should be able to see it. That allows you to use price and momentum to calculate upside target. And I think that could have us head towards $90 or so. All right here on CPT, this looks a little bit like a low risk reaccumulation, but within the context of a bigger picture downtrend. So if you were interested in buying shares here or doing a bullish option strategy, I think your first barrier would be around 112, next would be around 116, but there could be room for this to ratchet higher. Okay, ticker HII, this is a stock that is kind of running out of steam. So I would watch the low from January 26th to see if it stays intact. If not, we could see a deeper pullback towards the December 24th high. All right, BMY, Bristol Myers Squibb. This is one that actually has a great little potential buy setup happening right now. So it's starting to break higher. It's relatively low risk. You could put your stop below the January 21st low, and the upside potential will be towards $63 a share back on March 11th. All right, that's my take on a few stocks reporting on February 5th. If you found value in this video, this little new experimental way for me to evaluate a long list of stocks based on momentum, not just popular tickers, or you got some reminders about technical analysis, go ahead and hit that like button, and I'll catch you in the next video.